Hey everyone, me Kevin here. This is a message to all business owners and investors, as well as homeowners who might not know what happened in 2007 or even in the dot-com bubble. And I think it's worth mentioning it now since we're basically knocking on the door of all-time highs, just so you have it on your radar and it's something that's in the back of your mind. No, this isn't some like bear video on a market prognostication or whatever. The market's V-shaped recovered ever since we've been talking about setting trailing stops just in case a bottom falls out again. And none of those should have triggered. It's been straight up. It's been great. Again, macro econ, different video. This is more of a daily wealth style topic, again, for those of you with money, or at least debt. So everyone. Okay, here's the thing. I've mentioned in the past how it's desirable, at least in these times right now, to have a home equity line of credit, because if you have a traditional loan at, let's say, 2.99% or whatever, and you want some equity out of your home, you can pull a home equity line of credit and you could utilize that for your business or for an investment or really whatever purpose you want. Especially if you use it for an investment or business, you get to write off the taxes on it, which is great. A lot of people do this as well with margin, and that's fine and dandy, but here's one of the things to know. If you're using margin on index style funds like the Qs or the S&P 500, this is less important. If you're using margin, if they even let you on leveraged ETFs or on single stocks, or you have a credit line, business line of credit, or any kind of larger bank line, here's what happened in the dot-com bubble in 2007 and is likely to happen again. When and if things start getting shaky for banks, or banks actually get nervous, like, I don't know, the CEO of the largest bank in the world going on TV saying storm clouds are approaching and we're not interested in private credit right now, and things could get bad in the second half of the year. Not like anybody like Jamie would say such things. But once that starts happening, it's an early warning sign that some of history could repeat itself. There are people today that have this sort of delusion that there will never be a recession again because the Federal Reserve will always print their way out of it. This is very, very, very dangerous because the Federal Reserve is almost certain to be late. Remember, our peak crisis in 2008 was September of 2008. Our peak crisis in the dot-com bubble was around the middle to end of 2002. The Federal Reserve was at least 6 to 9 months late in both of those cases. COVID was a little bit of an anomaly. But here's what happens with these banking institutions. They can actually change the ratio of your margin debt. So for example, let's say you have margin on Tesla stock and it says, hey, you need, to maintain at least 25% or whatever. That's your margin rate, right? They can adjust that and say, JK, we think things are getting shaky and volatility is going up. We're going to bump it to 50% or 100%. For a lot of people, that could almost instantaneously trigger a margin call. Broker dealers, by right, by law, by FINRA regulations, can adjust margin for any reason at any time. Most people don't know that in their fine print in their broker-dealer contracts. Please, I do encourage you to fact check this with your own broker-dealer contracts, upload them to AI, do whatever you want. I'm just referring to the historical and what I learned when I ran through the broker-dealer licensing. The problem with that is they can do the same thing with credit lines at banks. So if you have a credit line, a business line of credit, or a home equity line of credit, there is a case, or there are cases where banks will not only freeze the line, we saw that a lot in 2007 where they freeze the line, they basically say, hey, no more draws. But some types of loans, they can actually even call them due and payable, or even potentially terminate your relationship entirely with a bank or broker-dealer if they find you to be too risky for whatever reason. That kind of stuff happens in recessionary environments or even leading into them. It certainly obviously gets a lot worse if you're in an actual recessionary environment. Hopefully it doesn't happen. But the big message of this is, do be aware that if you are a business and you're not diversifying that credit risk you have, and let's say you're all in on margin at one broker dealer, it might be worth diversifying some of that margin to be, against an index fund, or not have margin. Imagine that. Set a stop loss, right? Or make sure you diversify where you have. If you've got a home equity line of credit at one bank, maybe you have your business line of credit at another bank. It's uncommon for them to call a loan due and payable, and rather than just freeze it, right? So this could be just extreme conservatism, but it's something that I would rather people think about in an environment now where prices are very high, and just keep that in mind for your business planning in the future. I'll give you an example. When I went to get a plane loan from JP Morgan, they wanted to have what was called a remargining provision, where basically they'd be able to reappraise the aircraft every year if they wanted to. And if they didn't like the value or they thought the value had gone down a little bit, they could basically call you and say, all right, now we want you to add $1 million or $2 million or pay off a part of the loan. And that's crazy because, that's the kind of stuff that happens in bottoms, right? Where like you want to be buying the dip on stocks and then you have some stupid banker who's like high on the compliance horse and they're panicking because they're running out of money or they're getting, reamed in Congress for some kind of new banking crisis or whatever. And you don't want to be in that situation like that. So what I did is I actually told JP Morgan to go pound sand. I go, thanks for the 15-year relationship. You guys screwed me on my plane loan. It's fine. Like I didn't do a loan with them because I'm not going to put myself in that situation. So I have the plane loan I have is 20-year fixed. There's no prepayment penalty. There's no opportunity to call the loan. Like there's no accelerated clause in the contract unless obviously you don't make your payments, right? But that's on any loan. So just make your payments. Okay, fine. But understand that business lines of credit, some home equity lines of credit, less so on home equity lines of credit just because homeowners are so protected, but definitely business lines of credit, watch out for margin especially. A lot of people don't realize that they could change the ratios and the rules on you at any given moment. And that's a really big risk factor for, I think, a lot of investors because there's this belief that, oh, I'm so far away from the, margin call threshold or whatever, like who cares? Like, stocks would have to drop by 90% to get margin called. Maybe they only have to drop by 40% if they change the formula at the bottom. Now, brokers don't want to do that because they would lose customers, but they'll gladly do that if it means protecting themselves from going bankrupt, right? Not saying that had happened, but if there are sudden short-term shocks, these are the type of things just to have in the back of your mind. Hopefully this never happens. Hopefully this is just the most overblown, worry wart kind of conservatism video. But look, when I put it this way, I think it should make sense to you. With House Hack, we have over $60 million of real estate assets, $13 million sitting in the bank. Why do I say that? It's because we don't have any margin. We don't have any bank debt. We've got a few convertible bonds, obviously, because that's what we're raising right now. You invest, non-accredited investor, 5% yield plus the upside in the stock, whatever. But we're like super conservative. And I know that there are a lot of people with this mega FOMO of like, oh, deploy it. Why don't you buy Bitcoin with your 13 while you wait to buy real estate in Q3, Q4? Oh, why don't you go buy stocks? Like, sure, we could buy stocks. Sure, we could buy Bitcoin. Are we going to do that right now? No, because I like the Warren Buffett phrase. The Warren Buffett phrase that I love is the best call option in the world in uncertain times is cash, because it's a call option with no expiration date and it's available on every single asset class. In other words, that cash you have is a call option on every asset class that exists in America, and there's no expiration date. That's a fantastic way to look at money, and that's how we're looking at money with House Hack. Obviously, we're throwing money in money markets or 6-month treasuries or whatever while we're developing or designing and preparing to buy. So that way we're not losing money on our capital. That's exactly what Warren Buffett does as well. But I think it's important for a lot of people to think about that. I love that House Hack owes zero to banks. I love that I personally don't have margin debt or any kind of debt that can be called. I have no callable debt, no margin, nothing. Like, that's a great place to be in. I can never get called by a banker and be like, F you, pay up. It can't happen. And I think that while it's really fun on the way up, credit and margin, all that, I do think this is a worthwhile video, especially for business owners, because business owners operating, month to month on business lines of credit, not realizing that credit line could disappear on you overnight because of some stupid, SOFR shock, standard overnight funding rate shock, or vol spike or whatever. That's scary. That's not happening right now. But again, when it happens and I make a video about it going, oh, it happened, it was too late. You got effed. That's why I want you to think about it as an entrepreneur or a business owner now. Anyway, hope you appreciate this. See you next one. Bye.